Hello, hello. How's everybody doing? So I hope everybody's having had a great weekend. Once again, just I'd like to wish everybody all the best for this holiday season. Again, thanks a lot to all the faithful followers on the blog, on Twitter, and all over, all my friends, all my students, etc., etc., etc. Let's hope we use this holiday season to get rested, refreshed, and ready for 2013. I think we might do another update before then, and in any case, in January we'll do our first of year update and webinar because it'll be the first Sunday of the month, and so we'll do a full 1 hour webinar, so with live people answering any kind of Q&A. So hello, 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 23rd of December 2012. So let's take a look at this. Now, I was really hesitating about doing this webinar or not because I don't really want to promote over trading. Then again, there will be people trading next week. There's nothing wrong as long as the market's open. You can always trade if you want to. The only thing you have to keep in mind is that there's better times to trade than others. So especially in this holiday week, everybody's half day on Monday. Everybody's going to be off on the Tuesday. Pretty much most of the European markets are going to be closed on the Wednesday too. So keep in mind, markets can be very volatile, very thin, and what's important are the bigger levels, not necessarily the velocity of the move inside those levels, okay? So if you are trading, you might want to consider trading reduced size, etc., etc. Now, let's just take a look at a couple of things just to give you some kind of outlook for next week. So I think the main thing to keep in mind is that thin liquidity, you could get whippy moves. What's important is that to focus on the broader ranges. Do you break and hold outside broader ranges, or do you globally stay inside? I think one of the interesting things, starting with the ES, so S&P E-mini futures contract, is that what happened last week. So we're getting a lot of moves on this physical cliff, blah, 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 right? As usual, we don't focus on that. We focus on the levels. Now, one thing is just to remind everybody, we are still focusing on this bigger move on the ES, which was that long from 1262s into 1474s, and we got this whole of these 1340s. So you remember the followers and guys who are looking at all the charts that are posted on the active trades we take. We've been trading this quite aggressively to the long side, and we're looking for a move back into this descending trend line to square our longs, and we flattened out pretty much everything. Now, what's interesting is as we're hovering at those highs, right? Oh, and by the way, that move on this hold is pointing to a retest of these 1474s and then a break higher. Now, what's interesting that clearly the market got a bit scared on that overnight news. But what's interesting is what I mentioned on Twitter is that a lot of people focus on oh my God, the news, oh my God, it's selling off. Whereas, people who've trained themselves to look at the markets technically have a tendency to focus on levels, okay? So that means that you would not, either you're watching this live, or if you come in the next day, you're not thinking, oh my God, what's happening, is you're looking at this, you're going, oh, that's pretty interesting. Look at that. Look what happened. Even if you don't have the fib up with experience, you'll just eyeball it and you'll see, oh, look at that. That looks like a 50 back of that recent move, doesn't it? And surprise, surprise, it doesn't look like it. It's pretty much smack on, right? So what this means is even though a lot of stops got hit overnight and the market is a bit nervous, there's clearly buyers coming in. And what's interesting is that after we recovered all that quickly, we didn't get any more weakness. The market stayed very well bid, okay? And on top of it, if you go to a 4-hour chart, you see that it actually closed quite strong. It was triple witching, but it closed quite strong. And the market tends to continue, at least on the Monday, in the direction of the close on the triple witching or whatever. So, I would expect to see a bit more upside. So going into next week, really keep in mind it can be volatile, but unless you see some very aggressive sellers coming back below those 14.15s, 14.14s, or that lower range, you can now consider this a chop zone. I think the odds are that we either stay sideways or that we continue to grind higher back into those highs. Keep in mind, it's very tricky to make a forecast going into next week because of the thin liquidity, but that's what it looks like. And in terms of the broader range, I would say for the week is clearly, and into next year's, we've got to the upside, we've got those 123 extension of this 50 back, lows to high, 50 back, 123 extension coming in at those basically 1470. So I think the upside range is going to be 1470, 1475. And clearly now the low range is fairly clear because it's where those buyers came in quite aggressively on that dip. So 1393s, want to call it 1395s to the downside, 1475s to the upside, but it looks like it's still holding a bid tone and it might want to grind higher, okay? Yes, done and dusted. Now, another feature is CL. So what's going on crude? Crude is quite interesting. We were, the guys who follow me and actively, and you can always follow the Twitter feed to see all the chart updates, but we were looking at longs right down in those 85.70s on crude, looking for a move right back up to 92.20s. But basically that was into the 50 back of that recent move down, right? 100 down into 84s. Market tried to sell off. It made higher high, tried to sell off, higher high, tried to sell off, higher high. So this still looks to me like it wants to continue to rotate higher into that final target. And you see that this level kept on getting bought. So we like the setup here for a move back into 92s. Now what's interesting and what I would draw your attention to for next week is that you see that on this latest move up that got sold again, what happened is that buyers have been coming in ahead of the 50 back of this most recent move. So what I would say going into this week, as long as the market cannot break and hold below these lows here and get traction below that level, I think the path of least resistance is probably still to try and take a stab into this high range similar to the ES and then see if they can break higher for that final 92s. But again, tricky week. So personally, I'm not going to be trading. If I do trade, it'll be very light. So for what it's worth. Two interesting thing on gold and silver just quickly is that as we start to get sold off quite aggressively, what we talked about was a very interesting development, and that is that we were looking at a potential symmetrical move down on silver. And what's interesting is that it pointed to a finish right ahead of our support zone here. Okay, and what's interesting, a third thing is that if you look at our support zone that we had on our chart, is also that broadly came in line with the 61.8 of the move from lows to highs, right back 61.8 into 29.60s, okay? So the only thing I'm trying to say here, even though this looks pretty heavy, is that if this is going to catch a bounce, this was a very interesting place for it to do so because we had triple confluence of, first of all, our support resistance zone from the lines we draw on our charts and the webinars. Then we have the completion of a symmetrical move, A, B, C, D, and it's a 61 fib move. So it's very interesting. So the only thing I would say here, even though it looks kind of heavy, it looks like the odds here, or at least the pot odds, favor the upside rather than the downside. And I'm not talking about the upside for a move back into 35 or God knows what. The only thing I'm looking at here is for price to potentially move back up into the most recent support zone that broke very aggressively, okay? And what's interesting here is you see this low at support is coming in just at these 31.50s. And if you look at the 50 back of that recent move back down, it's in those 32s. Okay, so what I would say is that for the shorts to keep pressing this lower and for this move to continue to trade relatively heavy, the shorts are going to look here to sell any kind of move back into 31.50s, 32s. Okay, there's a 31.20, which is an important resistance zone too. But what I'd say for next week is, As long as the shorts can hold it, or they'll be looking to sell into that area, then we could see continuation of the move back down to test that lower support zone and possibly break it. However, if the shorts cannot hold it below that level, then I would expect price to potentially try and get a quite aggressive big all the way back up into those 33s. So again, the focus is the low end of the range are those 29.50s as support, and resistance, I would say it's that 31.50 into those 32s, okay? And you see a very similar pattern. That's why I think also this week, if you're trying to keep a trade over the holidays or something over the week, it'd be interesting to look at some kind of a pair trades on gold and silver, because they're very similar here. And sometimes, they correlate a bit more, a bit less, but here it's starting to look pretty interesting. And you see you have the same thing play out on gold, right? Actually, on gold, you can look back on the webinars for these past weeks, and I've been talking about this quite a lot, about the fact that I was looking to get long gold on a break back down into 1630s, into these 1660s. We have a midline at 1645. So we've been looking for this move back down for quite some time, even when it caught a bid. So it's very nice. And again, here we had the completion of the symmetry. And, we were very interested in the support zone. We were looking at it, very high odds that it held. Second thing, it also marked the completion of the symmetrical move. And similar to silver, if you put that fib up, you see that you've got the 61.8 that was actually that 1629. So again, very nice hold here. And as long as this low prints hold on gold, I would be looking for price to move back into the 1700. Now, I expect market to be really looking to sell this 1700 to continue this and see a push all the way back down to test 1600s. So we'll have to wait and see. But similar to what we discussed on silver, and in true, let's call it 50 fashion, the way we talk about these things now, focus, as long as those lows hold, is turning to the 1700. That's going to be a pivotal bull bear line for momentum if we get back up there, okay? So that's really the most interesting level for me for next week, if we get back up there. And in terms of range, as far as I'm concerned, the range now is 1750, 1700, 1650, as long as we hold above here. If we break back above 1650, then I'm going to consider the range 1700, 1650, 1600. It's very key to see how we open here into tomorrow, okay? Now let's look at euro and cable, and then we'll call it a wrap for this week. Now in terms of cable, start with this weekly. So basically from a weekly, we're still in this consolidation and we're moving up nicely, and we were trading this to the long side quite nicely all the way up into those 63s, okay? Now what a lot of people are going to be focused on is at once again this failure. Let me put this up. The computer wants to play with me, so bam. These repeated failures at the 63s, right? Okay, and this weekly close. Now, guys who follow me know we tend to be bullish at triple tops rather than bearish at triple tops here. So we'll have to see how this plays out. Keep in mind that in terms of this weekly, the move we've been talking about is this lows to highs that caught a very aggressive front run here, and which was giving us the possibility of a rotation all the way back up into 65.50s, okay? Possibly higher in extension, but 65.50s is our primary target, what we call our primary target, okay? So going into, if we go back on the daily, going into next week, what I'm going to be looking at is how price behaves if we sell back into the 50 back of that most recent move up, which is going to be, it's coming up pretty much at those 60s, okay? So actually I'm going to draw this as one of our normal line, 60s. And then I'm going to consider the 60.00 our pivotal line to the downside. Okay, so I wouldn't expect much surprise if we stay range bound, but as long as cable does not, any retracement does not get sold hard through the 1600, and we catch a bid in these 160 to 160.50, I would expect price to continue this rotation and at least try to trigger the stops above those 63s once again. If we break below that 160 and get a daily close below there, then I'm going to have to change my my view. What's going on Euro? Well, I think, again, everybody's pretty familiar on, I've been talking about this for quite some time. If you're interested in the whole construction of the cycle view on Euro, you should go back a couple of weekly webinars because we really went through all the cycles and why we were expecting what we're talking about. Now, what we are expecting, what we were looking at, we've been trading the long side from these 127s, looking for a rotation back up into the opposing 50 back move, which is coming in those 134.90s, okay? Now, the 127 was a very, very interesting setup, okay? If you go back on the daily, it was front run of this 50 back move from highs to lows. Very nice confluence with 100 coming back in, and it started a beautiful rotation, and that's why we've been talking about the move up into 134.30s into that opposing move, which is 134.90s, okay? Inside this rotation, market was extremely technical, very, very nice. Even after we started this leg up, we came back down, lows to highs. What happened? Back into the 50 back, beautiful hold into 123 extension. So again, it's been extremely technical. The rotation higher has been very technical. And I think as much as a lot of people, even the macro guys, been struggling with moves, this year's been a bit tricky read. I think the markets have been, unless you've just been for some reason stubbornly short, you know, mid-November to December has just been a fairly easy read for most, trade for most of the macro guys, for most of the big money managers, or in general, anybody looking at the charts, because it's been technical rotation up pretty much everything. So right now, what I'd be looking at going into next week is these 31s, right? A lot of people are going to be talking about the fact that once, you know, there's two schools of thought here. You know, there's going to be some people that are saying, well, we broke above these highs. Oops, sorry. Which is a very important resistance, but we failed to hold and we're back here. Now, as far as I'm concerned, I don't consider us having failed to hold the breakout. And there'll be a lot of people saying that we broke up, and as long as we hold, it's going to continue to rotate. The way I'm looking at it is I'm going to look at it because of the fact that the markets are thinner and we could have less liquidity, etc., etc. I'm not going to be too technical about the exact points here, but what I am interested in is the 31 level, okay? So I think as long as, even though a lot of people are talking about the 31.50, you can look at the 31.50. I've got you know, nothing against that, and we can put that up on the chart too. But I think we could see some kind of whippy trade, so that's why I think you need to give yourself a bit more room. And, you know, so I'd say as long as we don't start getting daily closes below the 31, I think we could continue to squeeze in a relatively aggressive fashion back up, okay? The 50 back of this most recent move is coming in at those 30.90s. I'm not a big fan of this move because we've got a lot of wicks to the upside, so I'd much rather look at this bigger move, which has got a 50 back, which is coming in at those 29.80s. sorry, 2980s, 2900. So I think going into the week, let me make this a bit bigger. What I'd be looking at is, again, as long as we don't get a close below these 31s, then I think the chances are that we're either going to continue to squeeze higher or just possibly even just stay in this range. But I think it's going to be difficult to get any kind of sustained weakness as long as we can't get a daily close below that 131. And if we do break below the 131, then I would not be surprised to see us potentially move all the way back down into these 129.90s, 129.10s relatively quickly. Okay, so it's 100 pip to the downside. So that's the big risk, but even though that's going to be an interesting support zone. So again, guys, keep in mind the market's going to be thin just because there's little liquidity. January is when the volumes come in. January is when the bigger interesting moves are going to likely come. So you don't want to get chopped around in very thin market. You don't want to get into some kind of trade this next week and then you're stuck babysitting it throughout the whole holiday. You know, try and be a bit smart. And I also like to use this period between Christmas and New Year's just to kind of step back. I always like to be in contact with the market. So, you know, guys who know me, I'm never away from the market. I'm always following it. But I like to use it as a week where I reflect on what happened this year, how I traded, and just, you know, take a step back, staying in contact, but not actively trading for this whole week, okay? So I hope that was interesting. I hope that makes sense. And again, I wish you, your families, all the best. We'll talk before the end of the year, I'm sure. And just have a great time. And I'll post this video. So talk to you soon. Hope this was helpful. Bye-bye, guys.